I would like to present about the introduction of this project. In March 2019, World Health Organization WHO declared the pandemic coronavirus that spread to the whole world. In January, this project will discuss about the application and disclosure of MFS 110 event after the reporting period, then the key audit matter from the 5 chosen company. Then we will measure the company performance by using the company working capital ratio that analyzed from the annual report of the financial year and 2018 and 2019. Besides, we also made the comparative between company and conclude how the company performed based on the working capital ratio stated. 5 chosen company we provide is first RGB International Berhad, second is Zealand Berhad, third is Fittest Diversified Berhad, 4 is Falim Group Malaysian Berhad, and the last one is Smith Corporation Berhad. Then we select this company due to the challenge of the company and they have well-known company in Malaysia. And therefore, we can challenge ourselves to use the data of their company for this assignment as well.
Part I will explain about the disclosure of MFRS 110. According to the MFRS 110, event after reporting period is an event occurring between the end of a accounting period and the date when the financial statement is authorized for issue. There consist two types of event, which is adjusting event and non-adjusting event. Adjusting event is the event that exists at the end of reporting period and it requires adjustment to the amounts that had been recognized in the financial statement before they were issued. Meanwhile, non-adjusting event is the indicative of condition that arose after the reporting period. It requires disclosure, not an adjustment. So this event provide evidence that did not exist at the balance sheet date. Most companies in the world are buying for this event, but also have some company and that don't apply for it. Conclude our survey about the company MFRS 110 event after reporting period. We came to conclude that all the companies such as RGB International Berhad, Zealand Berhad, Fittest Diversified Berhad, Falim Group Malaysia Berhad, and NSMIS Corporation Berhad have MFRS 110 due to the pandemic COVID-19 in 2019. On top of that, RGB International Berhad also purchased ordinary share from the open market as treasury share with the amount RM for 841,841 also happened in 2019. And last but not least, we conclude that Fittest Diversified Berhad have dividend in specie that also happened in 2019.
First, we can conclude that RGB International Berhad, Zealand Berhad, and Fittest Diversified Berhad have the same key audit matters, which is impairment of trade receivable. However, RGB International Berhad has it in both years. In 2018, the impairment amount was 126,263,718 ringgit. And in 2019, the impairment amount was 168,182,819 ringgit. On top of that, Zealand Berhad only had it in 2018 and the amount was 12,800,000. Fittest Diversified also has it in both years. In 2018, the amount was 3,818,000 and 4,067,000. So, we can conclude that RGB International Berhad, Zealand Berhad, and Fittest Diversified Berhad has the same similarity in the key audit matters below the impairment of trade receivables.
Next, we also can summarize that Zealand Berhad and Fittest Diversified Berhad have the same key audit matters, which is impairment on construction revenue and expenses. Both of the company have in both years. For Zealand Berhad in 2018, the impairment amount was 6,890,000 and in 2019 is 5,550,000. Meanwhile, For Fitters Diversified Berhad in 2018, the impairment amount was 8,156,000, and in 2019 the amount is 25 million, 2,260,000. So we can summarize that Silam Berhad and Fitters Diversified Berhad have similarity in the key audit matters below the impairment of construction revenue and expenses.
Then, for filing group mentioned Berhad and the Fitters Diversified Berhad have the same key audit matter, which is impairment in goodwill. In both years, filing group mentioned Berhad and has the impairment of goodwill without any amount stated, but Fitters Diversified Berhad has the same amount of 4,360,000 in the both year. Fitters Diversified Berhad also has an impairment of the property, plant and equipment in both year. And in 2018, the amount recorded was 251,614, and in 2019, the amount recorded was 229,518. However, filing group mentioned Berhad has revenue and expense recognition in both years. Last but not least, for SMIS Corporation Berhad had impairment of inventory, and the amount of inventory was not available. SMIS Corporation Berhad also has the similarity with the Fitters Diversified Berhad, which is the impairment in investment of subsidiary. Fitters Diversified Berhad, which with the carry amount of in the both year are the same, with which was 146,718 ringgit. Meanwhile, SMIS Corporation has no amount recorded in the key audit matter. Next, I would like to present about the analysis of the quit ratio. In other words, quit ratio, also known as acid test ratio. Quit ratio is a liquidity ratio that measures the ability of the firm to make the settlement of the current liability throughout the current asset without the inventory in the 1 year current period. The inventory is not included in the quit ratio due to the trade-off. It's generally more difficult to turn into cash in the short current period. Based on the chart, we can analyze that the highest quit ratio indicate the company is favorable to make the settlement of the obligation of the current liability by using the current asset without the inventory is the filing group mentioned Berhad. Besides, which is 7.7% and the 7.32% of the year 2018 and 2019 respectively. However, it decreased by 0.54% throughout the year, but still the highest quit ratio compared to the other company. While the lowest ratio indicate the company has taken too much debt or unable to collect the account receivable is the Zelan Berhad, which is 0.22% and the 0.37% for the year 2019 respectively, and it increased up to 0.15%. This means that the company Zelan Berhad is not effective to manage the quit asset rather than the obligation. On the other hand, the second highest is RGB International Berhad, which is 1.9% and the 134% for the year 2018 and 2019 respectively, followed by the SMIS Corporation Berhad, which is 1.11% and 1.31% for the year 18 and for the year 19 respectively, and Fitters Diversity Berhad, which is 1.4% for the both year 2018 and 2019.
Inventory efficiency ratio analysis. An efficient inventory management system, meaning that the company is spending less on storage. With the graph provided above, in the year of 2018, the most efficient company goes to RGB International Berhad. Why? This is because on average, RGB restocks inventory 40.12%. That is a lot more than other companies. Why? Because RGB International Berhad provided consumer product and services, and people use it on a daily basis. This shows that the company managed to have an efficient inventory ratio. Why? Because the bigger percent of the amount, the more efficient of the company inventory is. On the other hand, Farlim Group Malaysia Berhad is not performing well in the year of 2018. The company only restocked 0.18% in a year. This shows that the company is hard to gain stocks for customers because Farlim Group Malaysia Berhad is a property-based company and it is hard for them to get customers within time. Meanwhile, in 2019, 4 of the companies are decreasing, but only RGB International Berhad is increasing. As mentioned, RGB is a consumer product and services, so people use it more than other company. RGB once again restocks 58.42%. This is 10.30% bigger than 2018.
Next, I will continue with trade receivable days analysis. Trade receivable days is used to measure how much the company can collect on those credit sales from their customer in average within 1 year. From the graph, we can see that in the year 2018, the most efficient company is Fitters Diversified Berhad since the trade receivables days for the company is only 301.35 days. This means that the company is able to convert its receivables into cash by only 301.35 days. This is a good situation because the sooner the cash can be collected, the sooner it is possible to use the cash for other activities. On the other hand, we can see that Farlim Group Malaysia Berhad is not very good in the year 2018 among the 5 companies. The companies take approximately 397.33 days, which is more than 1.09 years to collect back the cash from customer on average. A high ratio means that the company has poor collection system and customer are being unable to pay back their transaction. While in the year 2019, 4 of the company has shown increased trade receivables days in their company. Fitters Diversified Berhad is the one that increased very much the trade receivable days in the year 2019 among the companies. Fitters Diversified Berhad continues to increase its trade receivable days in 2019 to 466.25 days, which is an increase of 164.89 days from 301.35 days in the year 2018. On the other hand, only one company that shows that decline days of trade receivables in the company. Farlim Group Malaysia Berhad obviously decreased their trade receivable days so much from 397.33 days in year 2018 to only 300.35 days in the year 2019. This proves that the company able to manage their trade receivable efficiently so they can collect the debt much sooner from last year. Low trade receivable days means that the company is more efficient in collecting its receivable and indirectly reduce the operational risk. So next, I will continue with trade payable days analysis. The trade payable days can show the ability of the company to repay the debt to its trade creditors, including suppliers, vendors, or other companies. From the graph, we can see that the efficient company to pay back the debt to suppliers in a short period rather than other companies in 2018 is Fitters Diversified Berhad, which is average of 259.77 days. The company can pay back trade payable from its credit purchase less than 1 year. On the other hand, the most not efficient company to manage its debt and taking a long time period to pay back to its supplier is Za'abar Berhad. The trade payable days are average of 372.83 days in 2018. This company takes 1.02 years to pay back the debt to its supplier. From the graph, we can see that all companies had increased their trade payable days in the year 2019. However, Fittest Diversified Berhad is the one that increased very much the trade payables days in the year 2019 among all companies. The company continues to increase its trade payables days in 2019 to 501.58 days. This means that the company are paying their supplier more slowly as the number of days rise from one time to next, which is a sign of a weaknesses financial situation of the company.
Now, I would like to present my part, which is the sales to working capital as well as working capital financial analysis. So, before I start, let's start by defining the meaning of sales to working capital as well as working capital and what do they say about the financial analysis for the company. So, sales to working capital ratios, which is also known as working capital turnover, is a ratio that measures how efficiently a company is using its working capital to support a given level of sales. Sales to working capital shows the relationship between the funds used to finance a company's operation and the revenues that a company can generate. The sales to working capital ratio can be calculated by dividing the annual sales by the average working capital. So, based on the chart, the sales to working capital ratio tells us that a high turnover ratio shows that management is being very efficient in using companies' short-term assets and liabilities for supporting sales. Referring to the chart, RGB International Berhad has the highest sales to working capital, which is 11.48% and 15.71% for the year 2018 and 2019 respectively, and increasing by 4.23%. The sales to working capital also mentioned that a low ratio may indicate that a business is investing too many account receivables and inventory to support its sales, which could lead to an excessive amount of bad debts. So, if we refer to the chart, Zelan Berhad had the lowest ratio among the 5 companies, which is 0.17%, that remained unchanged for both year of 2018 and 2019. For working capital, which is also known as net working capital, is the difference between a company's current asset and its current liabilities. The net operating working capital is a measure of a company's liquidity and refers to the difference between the operating current assets and operating current liabilities. It also measures a company's liquidity, operational efficiency, and its short-term financial health. Working capital also stated that if the company has a positive working capital, then it should have potential to invest and grow. If the company's current assets are lower than its current liabilities, then the company may face problem paying obligations. Based on the chart, all 5 companies have positive working capital throughout the year 2018 and 2019. The highest working capital among the 5 companies is Zelan Berhad, with an outstanding amount of 466,944,000 ringgit and 474,832,001 ringgit for the year 2018 and 2019. The lowest of the 5 companies for the year 2018 is Falim Group Malaysia Berhad, which is 13,751,160 ringgit, and while for the year 2019 is RGB International Berhad, which is 16,996,768 ringgit.
conclusion, this project has helped us to realize that MFRS 110 is very important for companies to maintain their company's performance level as the COVID-19 pandemic has spread around the world and has affected the economy. As for the main audit matter, we can find that the main audit problem is very necessary to increase the communicative value of auditors. Report in assessment of financial reporting by providing greater transparency about an audit that has been done. Last but not least, as for the working capital ratio, we can conclude that by paying off the current liabilities with the current assets, we can measure the ability of a company, and it is important for the creditors because it will reflect the liquidity of the company.
So that's all for me. Thank you, doctor. Have a nice day. Stay safe.
With that, I end my presentation here. Thank you, and please stay safe, stay at home. Bye.
That's all from me. Thank you. Stay safe. Stay at home.
Okay, thank you, doctor. Stay safe and have a good day. Thank you.
That is all from me. Thank you. And stay safe, everyone, during this COVID time.